All right. Good morning. Good morning. Good morning. How are we doing? It's been a morning from heaven. It's been one of those mornings where everything that could potentially go wrong tried to go wrong, but we're here now. Good to have you. Good to have you. Just letting. Okay. Cool. 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 All right. Okay. Quick second, everybody. All right, all right, all right, all right, all right, all right. Let us go. Okay, so Tuesday morning, this is when I like to come to the markets. Usually I like to be a bit earlier. But like I said, today has been a day from heaven. But we're here. And I just realized that we've actually, in the period of time I was dealing with some. Good to see you, Tony. Revelino. Good to see you, Tony. Dealing with some very annoying technical issues, like everything: camera, mixing console, laptop, second laptop, main system. Got all those working. Got one of them working. Then the internet went down. Backup internet that went down. We're back to the main internet. Now it's working. Anyways, let's go. So we're going to be looking at gold and EU. For those of you who are not market breaker course students, if you wonder why I've been sticking to EU and gold for the last several weeks, it's because those are the two assets we have given our students to focus on, to specialize on, to learn the markets properly before they start to diversify. So for the foreseeable future, you see me on YouTube, it'll be EU and gold. And the truth of the matter is, you can make a killing with EU and gold. So, all right, so let's start with gold, shall we? And today, I'm not so much going to be teaching as I'm just going to be talking you through my analysis process, what I'm looking for, what I've seen, what I'm going to be putting my hat on for the rest of the week. I will drop in the odd nugget here and there as usual, so that's not a problem. But it's not a class to in the classic sense of the word, pun unintended, but kind of cool. Maybe I'll claim the pun there. Okay, so as usual, we're gonna go to a blank chart or naked chart, as I like to call it. We like to call it in class. Now, usually I wouldn't do this all the time because everything you see on the chart is something I put there in the past, but to help you understand how to get to what I'm going to be looking at, I like just clean the chart. Also, it means you're not distracted by too many things. All right, so cool. So there we are. So as usual, 4 hours my signal time frame. So that's where I start. Now, so I start just looking at. Of course, like I've shown you before, it's just to see, okay, does anything catch my attention? So this is what the picture is of my signal time frame. All right, so that will go up. The highest time frame I'll be looking at is a weekly time frame based on what I'm trading. Okay, so I think you can hear me. So let's look at the week, shall we? Right, so we've taken that out. We've swept that level and reclaimed through it. Again, I did this in class on, was it Saturday? But so basically we took out that low, we reclaimed through it. Again, just for me to be confident that that is an institutional move. Okay, so that's an order block there. Okay, so that's fine. Okay, so that's fine. So basically, this order block or demand zone, I think demand zone, whichever way you want to call it, we dipped into that, we reversed, that's fine. On the way up, We took out that weekly high. Okay. We took out that weekly high. Okay, so, and then we had this engulfing, which we have then, so from here to there, from that high to that low, that candlestick pattern. If we done 1-to-1, we are very close to 1-to-1. Okay, so we're now in this area there. There's another block right there. Demand zone, or supply zone, sorry. Okay. So, all right. So that's that. There's a weekly high there. That would not be a bad idea for price to raid. Also, there is this level there, just above that. So basically, I'm just purely based off the weekly, without going down any further, we might still have a little bit to go. Emphasis on still. Having said that, we're already there. So that's another resistance level that I would be looking at, which that's the low of that week. So we have touched that. So also there is a smaller order block in there. Just let me know in the comment section if you can hear me loud and clear, because I think I'm mumbling a little bit because I'm thinking as I'm moving, or as I'm thinking as I'm working. Let's put this over there. I'm not going to be using that system. Just in case I'm surrounded by computers. I've got 1, 2, 3, 4, 5, 6, 7 screens in front of me. Don't ask me what each of them is for. Death by 1,000 screens. Not death. I take that back. That's a classless joke. All right, so basically we're in an area where I expect, now between you and me, I expect some kind of reversal this week. At what point of this week, I don't know, but I expect some kind of reversal this week. Okay, that's fine. Let's go down to a daily chart. What do we see? Okay, so yeah, that was the reversal there. And yeah, this was a daily sensei profile. Took out that low. Price reversed. Look at that. So it's got to be straight. Otherwise, my brain just can't handle it if it's not straight. Okay, it's a yes, it is a classic. Is that T? Let me know. I think that might be K, actually. I'm not sure which of you it is, but whichever one of you it is, good to see you. And so, yep, took that out. Okay, so now this is the thing. I've been screaming now for the last couple of weeks that I'm still, because look, on a daily chart, there is this big old fair value gap sitting there. All right? Just sat down there. The price is never filled. We fill this one pretty much, yeah. So, but this one's calling for attention. Now, I mean, maybe it's just me. Maybe I'm just in denial, right? It could be that I'm just in denial, and it happens, you know. Nobody is 100% right, but I still like price to come down in there and then go to the moon. Just me. And just me, right? Just me. I would not be surprised to see that. Because if we go from here, no, not you. If we go, yeah, this is what I want. Yeah, if we go from here, this low right there. Okay, so first high was here, right? That was the first time price paused. Did it give us a 31.8 retracement? No, it did not. 38.2, sorry. No, it did not give us a 38.2 retracement. So I'm happy to be wrong. Don't get me wrong. I'm not, but I'm still calling for this, or at the least this. right? But I like this because it's a fair value gap. So, by the way, I saw a video recently by one of the world's most successful traders who's traded for a hedge fund. I want to call his name, who was having a go at smart money. Well, he actually, in fairness to him, he did not have a go at smart money concepts. He had a go at ICT. I kind of agree with him, to be honest. I mean, a lot of my success in trading I owe to studying two people, Chris Laurie of Pro Trader and then Michael Huddleston of ICT. Over the years, we've come to find that Michael Huddleston is pretty much, as a trader, not what he presents himself to be. I also think, like me, so I'm not having a go at him, like me, he has some what you would call neurodivergent issues. So I'm very sensitive to that because I can relate. But let's just say he said some things that just don't make sense. So some of them are flat out lies. And the last thing that was said was that all he's done is repackaged Asian trading principles under his own name. Who cares? They work, right? So we've got to give Michael his flowers there. He put them in names and concepts and built a movement and community around them that made things that have been sitting in the market for a long time easy to understand by the lay trader. And also, in fairness to him, he never claimed he invented them. So whether or not you think the person is worth following, I can tell you his principles that he's taught, the raw principles, not the nonsense he says about what he's done with them are. All right, back to the chart. Okay, wrong mouse. So I'm kind of calling for something like this. However, does it happen here, 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 or here? So you see, I think this week we're going to get some sort of significant retracement action, but where would it happen is the question. We could be there right now. We could raid this, we could form a high here, push down, raid it back to this one or this one. So we don't know, right? And there's nothing wrong in saying we don't know. So the question is, if we're pushing up, I want you to think of this. Let's go back to the weekly now. I want you to think about how a weekly candle is going to form. If we're going to go up this week, we would expect to start by a push down, right? A push down, find some support, which we might already have done. That might have happened on Monday. See, this push down could be it, and then we're off to the races. In which case, this is a big fair value gap right there. That is a big fair value gap right there. Which could happen. Fair value gaps form on a weekly basis. One formed last week. And they usually form at the beginning of a very, very significant move in price. Hi, T. Good to know it's you. At the start of a very big push in price. We've already had one here. I don't know, mate. Methinks we might still have a bit further down to come, which means if it's going to be a down week, we will first expect price to push up, which it has done significantly and could still do. So if we're pushing up, I think I've drawn the levels that I'm interested in. If we are pushing down, let's see what catches my fancy here. If we're pushing down, that level there, that level there. Well, you know what? The bus stops are going to do that for us. So we have an indicator that draws for us every weekly open, high, low, and close at plural markets, and I have it on. I'm going to put it on my chart in a second, so I don't need to be too bothered with that. Okay, so directional bias from a daily chart. I will have far more clarity after today's form. Now, if today engulfs bearishly, then my retracement analogy hypothesis is alive and well. So if we take out that low today and the close of this candle takes out the open of this one, so the two things I need, all right? I want you to write this down or store them mentally. Two things I need to treat this as a valid retracement or reversal. I first of all need price to take out that low. So the low of today has to be lower than the low of yesterday or Friday, right? Secondly, the close of today has to be lower than the close of Friday. If I get that, then I'm good. But what if I don't get that? Okay, so now let's go to our signal time frame. One second. Okay, so 4-hour time frame. What do we see? First of all, let's go to the weekly and take off that trade block. All right. Okay, come on now. So that's just Trading View again, doing what it likes to do. I think Trading View has a problem with Safari, and I can't use Chrome on this system for some technical reasons I don't want to bore you with. Okay, cool. So that's the 4-hour. Let's take off the Fibonacci as well. Okay, so what do you know? We've had a sensei. We've taken out that high. I wish I was awake last night. Look at that. We've had our first trade of the week already. So we took out that high, and we had a reverse hammer, or hanging man, or not quite a hanging man, but close, an inverse hammer. So, like we say on a 4-hour chart, it would very easily have just taken this as an entry point to hunt in a lower time frame and push up for 1-2-1. And yep, 1-2-1s happened happened quite a while ago anyway. Okay, my mom's trying to reach me. I'm gonna have to tell her I can't speak to her. Alrighty. So, and I think there is good. Anyway, let's look at that in a 15-minute time frame. And by the way, I'm looking at my charts for the first time this week live with you. So I didn't open the charts on Sunday. I didn't open them yesterday. It was my day off. I needed a day off, and I couldn't open Amelia today because of the technical issue I told you about. So we're looking at this for the first time. Right, so, okay, what here would have got my attention? I think this is where we turn on the bus stops. This is where we turn on the bus stops. So take away volume profile, take away institutional ATM, bus stops only. And on the bus stops, I do not want anything except the weekly and the monthly. There we go. In fact, I can actually take out the monthly on this one because a monthly high and low will also be a weekly high and low. All right, so those are the lines I'm interested in. Okay, I see it. There we go. There we go. There it is. This candle. Okay, I want you to look at this. You're going to see this pattern a lot. See this 15-minute candle there? It just took out the high of this one and then basically cleaned it out to the downside. Right? It's also, if you like your SMC stuff, look at this here. That is what you call a breaker block. So this would have been the entry, right? That would have been the entry. That would have formed, this morning at 2:47. That's gold for you. It'll give you entries all around the clock. And like I said, I like to go for at least 3-2-1. But once a trade crosses 2-1, I am not going to be losing money on it. At worst, I will take a break-even exit. And as you see, that lines perfectly with the week open. That means that was the open of a week in the past. We don't know what week it is, but that was the open of a week. Okay, and so there's also this cluster. Oh, this is good. This is good. There's a low just here that was cleaned out. There is a cluster of two consolidation clusters, one there, and the other one. How would I draw this one now? I think I would draw it this way. Yep, something like that. So if I take out the middle of both, the lines of the middle of both, and to make it clear, this is a consolidation. Let's do that. Okay. Okay. So we've reached this one already with potential to reach okay, so let's do that. Okay, so basically this trade triggered at 3 a.m. in the morning, and let's just assume that we're still in it, but we didn't take it, right? But we've seen this. Now, one second. Okay, sorry, my mom's talking to me about something important, but that's fine. So, all right, so we didn't get this entry, did we? Now, how could we have gotten in on this trade even if we didn't get the original entry? Well, we missed that while we're trying to set up, because did it give us no, actually, did it give us no, it did not actually. One more pip, and I'm using this, basically the engulfing level here. So one more pip and we could have got an entry. You could basically, if you missed this entry up there and you see this happen, why? This is another sensei, a mini sensei here. We took out that high. Then we reversed. Not only did we reverse through it, we took out this low, came all the way back. I would have put if you could have put it there and then you would be in the trade, but I'm just being honest with you, I would have put mine there. And so I would have missed this trade literally to the pip. Look at that. I'll have missed this entry almost by exactly 1 pip or thereabouts, which is fine. If you put the entry there based on that candle, you would have been in this trade and you would have been at this point up 2.5 to 1. But I'm going to be honest with you, that would have been my re-entry level, and so it would not have triggered. But then, assuming it had triggered, I would have been up 3 to 1 already. So this is how I scalp, based off higher time frame action. Okay, so let's go back to a 4-hour chart, because the chart's getting a bit cluttered now. What am I looking for? So let's get rid of that, and that. No, that will stay. And that. Okay, so get rid of that consolidation as well on that one. Cool. So what's likely to happen now? Well, on a 4-hour chart, let's see. If we take this out, if we take out this low there, or even, no, I'm not trusting that one. If we take out this low there, distracting me. Okay, where is this thing? Um, 1 second. I've got some music playing somewhere on my computer that is distracting me. If I can find it. Okay. Anyway, I'll find it later. So this is what I'm looking at now. If we get that, we could potentially, let's just assume it comes to that level there, right? I'd then be looking for 61.8 or even 74% retracement. So I'll be looking to see this come back to somewhere in this region, and then go further. Maybe back, maybe to that level, into this order block-ish here, or maybe even clean out. No, that's not low. So maybe somewhere like there, then back there, then further down. Then further down again. So that could be our week. All right? That could be our week. Now, alternatively, this could just be used to pick up liquidity, in which case we then push up there. Now, if we did that, the question then becomes, is that because we're pushing up for even further, or could we then from there start to see a breakdown, here? Again, we don't know, right? So we don't know that for a fact. Today will tell us a lot. And so for the rest of today, again, I'm not showing you volume area high, volume area low, point of control, and all those other things. I did show you an order block or two, because we haven't, for the students, our students, we haven't covered that yet. So, you know what? Some of you know about this stuff enough already. So let's just put that on and see what it tells us. Right. So volume profile. First of all, let's anchor it on the weekly. So let's see what there is to see. All right. It's taking a sweet time. Okay, I think we have, yep, so I think the screen's getting a bit too cluttered, so let's get rid of some stuff, shall we? Okay. So this was last week. Last week was an expansion. Now, this is how I want to teach you to read volume profile as a beginner, right? I'm going to strip out a lot of stuff. The P profile data for a lot of stuff. First of all, the period you're looking at, now we're looking at weeks. Was it a contraction, a consolidation, or an expansion phase? Simple, right? Okay, so here These here were contraction and then consolidation profiles, you see. They kept getting narrower and whatever. This here, this week was an expansion week, right? Expansion week. Then we went back into a contraction week here. Then last week was an expansion week. The question then becomes, are we expanding or contracting this week? Well, I will tell you something. You will almost never, right, see a volume profile week where one of the three lines, by three lines I mean the volume area low, that's this here, the volume area high there, and the point of control, where one of these three lines does not interact with one of the three lines from the previous week. It's almost unheard of. It will need to be a real world event like a catastrophe, a war, a crash, or whatever, or an extreme bubble. So this is last week's volume area low there, and we're way up here, and this week is forming, right? So this week's levels are forming. Last week's volume area low is right there. It is almost unheard of for us not to come back to at least this level there. 1 second. So this is, and I hadn't even looked at this. This gives me even more reason to believe. And bear in mind that last week has already formed. So this level's not changing, right? That volume area high from last week is not going to change. So I am almost certain that, okay, I'm 75% certain that we're coming back there. And if that's the case, that changes everything, because now this 4-hour engulfing, if I'd done this on Sunday or Monday, and I checked yesterday, this was 3 a.m. this morning, and this candle started at 7 a.m. So if I'd been awake at 5 a.m. on a Tuesday, like I usually should be, even as a 4-hour, even if you were a swing trader, this would have been a very nice punt for you. Right? To line up with this volume area there. And I'm going to change that color to gold to tell me that that on my chart moving forward is a volume area high or low. Okay. So I would not be surprised at all to see that happen. And if that's the case, then what would I want to see happen here? There's this low there. Take that back to white. There's that low there. Price could come beneath it, go up, and then do something like this and this and this. Okay, 1 second. Let me take a screenshot of this just in case we need to come back to it. On the 15-minute chart, what do we see? Now notice I've skipped all the major malarkey, well, not malarkey, it's important, but the major stuff about the volume areas, the gammas, the deltas, you can't, most of you can't handle that right now, and that is fine. Okay. If this candle here closes beneath, so you see this blue line there? If we close beneath that on this 15-minute chart and we retest it and reject it, We might have a trade like this. We might have a trade, let's say somewhere like that. I don't know if I'm going to take it live. I might take it on a demo just to see. I have a demo that I treat like a live account, and I have a live account, and then I have a demo that I just mess around with. This might not be a bad shout. Depends on what we do with this 50-minute chart. Candle. We're going to key the high of this above that. And then first level, I mean, 1-to-1 if you're scalping. 1-to-1, probably to here. And then what do we have on this side? Okay. There's here, and there's here, and there's here. So I might do something like this, first of all, and see how we do. With the potential, maybe there. So that's a scalp. It's one, yeah, almost 2-to-1. With the potential to definitely clean out that low into that consolidation there, which would be almost 3-to-1. So, if you want to take that, let's see. But that candle would have to close beneath that blue line for me. Otherwise, I am going to be waiting for the opportunity to take a trade. Actually, one second, let's put this in. Okay, let's take some screenshots of this. And this. Okay. And then potentially all the way down there. That would be a nice trade. That would be, yeah, 5-to-1. It's the kind of trade, if you bank that trade on a Tuesday or Wednesday, you just shut your laptop, walk away from your desk, see you next week. Okay, so let's see how this, but like I said, just coming back here, based on the 4-hour chart, I think we are going to have either a reversal week or a week that starts with a significant reversal. Let's see. Why that's loading, but you'll see in a second. By the way, Tony, just let me know. I hope my screen's not blurry. I just realized I've got my VPN on. I hope my screen's not blurry. If it is, please let me know. It's a bit late, but still let me know. So yeah, that's last week's volume area high. I think we're going in here and probably even further in. Maybe even up to here. If we pop a fib on that, from there to there, it's fine. Thanks, Tony. If we pop that fib there, yeah, that's the 61.8. That's what I was calling for, wasn't it? Also, if you go from here to there, that's the 74. So whichever way, I think we get to my yellow line. All right, let's see. Okay, very, very, very quickly. Let's look at EU very quickly. Actually, let's open another. All right. Trading View, I am not interested in your summer sale. I've got a subscription already. By the way, shout out to Kieran and SD for putting me on to TradingView. Some of you know I used to be a very stubborn MetaTrader 4, not even 5, MetaTrader 4 trader, until Kieran and Tony basically talked me into spending money on TradingView. Best decision I ever made. Well, not the best decision, but very good decision. All right, so EU, let's look at the same. So start with a 4-hour chart just to see what's up. So Tony says it's fine. T says it's okay. I don't like the phrase okay. One second. Let me take that out and see if it makes a difference. Okay, so the VPN's off. Now, let me know, is it any better? Is my chart any better now without the VPN? Where's IC market? Four-hour chart. It's grainier. Okay, so it's actually worse now. My bad. So put the VPN back on? Is that what you're saying? Tony, let me know. Do you want me to put the VPN back on? Okay, let's put the VPN back on. The picture was sharper. All right. So we're putting the VPN back on. Okay, I think the VPN's back on now. Tony, let me know if it's better. So anyway, this is 4-hour on EU. Let's go to the weekly. So this is another one that I'm not that clear on the weekly on this one, whether or not we should expect a reversal. Okay, so I'm not that, let's see. So we broke structure there, and then took out that. So from here, to there, we've had a 71.8. If we move back down from there to there, sorry, 61.8, we've had another one here. So yeah, it would seem that maybe we are going to do something like this. And then that, if that is the case, this high there. See, this is the thing now. There's a couple of weeks, 3 weeks back to back to back, technically 4 weeks with similar from a weekly level. So could we see this? Could we see something like this right here? a little bit of this and a little bit of that, like that. That is plausible. There's also a weekly order block right up there. Okay, now let me do something you probably haven't seen me do before. I'm going to lay on a volume profile, and I'm going to anchor it to a quarter. Okay, so this is the quarterly volume profile. Aha, look, that's the volume area. So we've just crossed the point of control of last quarter's volume profile. So we could see a reversal here. This would be a good week to see a reversal because we're in line with that. So I'm just going to draw that out in red for you to see. So that's a POC. We could reverse there. Alternatively, it could be here. And the reason why I won't say I'm suspicious, I'll just say I'm intrigued by it being there, is that it would also get, I mean, this is, okay, one second. This is already taken out a high here. So that has already taken out a high. Ring's getting me way. Fine. So that's already taken out that high there. So this is a valid place to reverse. Secondly, this here, I can bet you on a 4-hour chart would be some sort of consolidation there. See, price range for 3 weeks. On a 4-hour chart, I can almost bet my lunch money that that will be a consolidation. So maybe we go there. Okay. Okay, so basically all options are on the table. We drop down to a daily. On the daily, I am now going to anchor this to the monthly. Okay, so, okay, now, so we've just cleaned up last month's, no, actually 2 months ago. So last month was a contraction month, as you can see. So contracted, expanded into a level, contracted at that level, expanded back out. Again, this is what I would expect to see institutionally in a volume profile. Okay, and then we're here. So this month's volume area, okay, so look at this here. So from 4 months ago, there is a volume area high where we have just come into. Just come into that. It also lines up with the month before's POC. So the month before has a POC just there as well, just above it, right? So, with knowing price like I do, I would not be surprised for it to run up here, at least there, before shorting. This would be classic. Or I mean, it could come here. Okay, let's go to Forex. So basically, on a daily, so on a daily chart, this is actually, one second, this is interesting. This here is interesting. We have already had what I would call a valid daily reversal. What could be happening now, today, and maybe even tomorrow, is price, one second, if I put in a fib from here to there, So let's get rid of this macro one. Could price be pushing back up to give us at least a 51, a 50, sorry, maybe even a 61, and then a dump back down to somewhere like here? Well, this is still forming, or here. I'm going to close this. Now, of course, it could be lower. We'll see. But if we go to a 4-hour chart, didn't expect EU to be this interesting. So let's get rid of that. Now you will see that fib I just drew is this one. So again, we've just had a 4-hour engulfing. If we see that, and we take that there, put that there, where's 121? Just above, look, 121 on that is just above the 50% fib level, and very close to this, our white line there. And we've already taken off. So while you and I have been chatting, we might have had a trade entry in EU. Okay. So we've taken out that low if we're using Sensei as our model. Taking out that low and taking out that high. Yep. So while we've been chatting, there's also a high here actually that we took out first. So first high, then second high. And this one came back for us. Yep. So here, what most there? But I would have been probably in there if you like across. And yeah. This would have been a 2.6 to 1 scalp. And if you are really, if you got the, if you've got the cojones, you'd put that there. And you would have been, yeah. Yep. So we've basically had a trade while we were, actually, no. This trade would have triggered as at 8:46. So, we didn't start till past 9. So we just missed the trade. Which is fine. It's all right. It's cool. It happens. So, but let's watch it and see. Does it get to target? 421. Now, big picture, what we think we say we're going to see. So let's go back to a 4-hour chart. Now, let's anchor the 4-hour chart to the weekly volume area. All right. So last week was an expansion week, a huge expansion week, and we are still, and that's, there you go. Look at that. So our target on the trade, which we just missed, is pretty much exactly last week's point of control. So makes me feel even better about it. Now, once that happens, if we react to the, meaning if price is turned around by the point of control, let's leave that in there. We could potentially see something like this. Potentially being the key word. So I am going to be watching very closely what happens when, if and when this trade hits its target. I mean, if we are taking this trade, we would right now be at 3-1. So, and again, I told you, once we get to 3-1, if I start seeing funny business, I am Audi. But let's see if we get all the way there. So, once this move completes, it might even go higher, but once it completes, if we have a 4-hour reversal, our next 4-hour reversal, I'm going to be very interested in seeing if we have a 4-hour sensei around that level. Actually, no. This could go higher, you know. This could actually go higher. This could go all the way up to there. This could go all the way up to there. Anyway, so that's what I'm looking for. So basically, I've missed one trade each in EU and gold that I would have taken if I was in front of my charts. That's fine. London kill zone's pretty much over. So I'll be back to my chart. I'll probably take another look at my charts roughly about 12. And then another one roughly about 3. Alrighty. Be safe in these markets. Risk size properly, maximum 1%. If you're trading prop firm account, you should be looking for no more than a 0.5% risk. We'll cover that soon when we do our prop firm masterclass, but I think I've given you the hints as to why. Thanks for the time. See you later. Bye-bye.